new panel for those who are physically present here and for our followers online. We are coming to the hotspot in real estate financing solutions panel, and we have gathered, thank you. We have gathered our panelists from several countries and from several industries, but they all have in common one denominator, which is real estate financing. So my name is Petar Tomić. I'm coming from Erste Bank Serbia, one of the local banks that is very active in real estate financing. And besides that, we have Martina coming from Croatia.
Hope you will enjoy this panel. I'm a partner in a law firm, Lovrić Novokmet, based in Zagreb. Most of my work is based on financing, not only the real estate, but also other types of financing, acquisition, project finance, and so on. And I hope I will contribute to this economic panel by my legal knowledge.
As we talked during the preparation, whatever we from finance create, you have to follow with the legal framework.
Exactly.
Yeah. Then our overseas guest, Maxim from Canada.
Hello, everybody. My name is Maxim. I'm coming from Toronto, Canada, doing commercial financing. I'm currently at Home Capital Group, which is primarily a bridge lender in the real estate space. But prior to that, I spent about 5.5 years at First National, which was the largest non-bank lender in Canada with 100 billion of assets under management and primarily focusing on rental financing, so apartment financing as an asset class, which we'll get into in a bit. But we covered all asset classes across all industries, and we had a really wide range of products. So I'm really happy to be here and see what's going on in the Serbian marketplace.
Looking forward to broaden our views on financing solutions in that respect. Then, Vladimir, please tell us about your experience.
Thank you, Petar. I'm Vladimir Drašković. I'm a financial advisor in the field of equity evaluation, financing, and reorganization. Capital markets are related and very close to the real estates, but in Serbia it's not so as in Canada or some other developed markets. So we are here to discuss it and hope to improve that. Thank you, Petar.
Thank you. And Radislav is representing another industry that is closely related to the real estate, insurance industry. Again, not so present on local market, but globally with massive influence on development.
Exactly. So my name is Radislav Osmelić. I'm head of Central Eastern Europe and Turkey in Willis Towers Watson. We are one of the leading global insurance brokers, but also insurance advisors and human resource advisors. So bringing here, I think that can be just our expertise from the region around the insurance side in terms of insurance investments, and on the other side, assessing the risk in terms of investors.
Thank you very much. So, in a nutshell, the world has changed since our last REBEC last year. So we have inflation, we have higher interest rates, we have different yield curves, and on the local market, we like to joke that all those stuff are coming from the West. And in that respect, I would like to give the word to Maxim to share his view on those macro topics and their influence on real estate development, real estate investments, and let's say the returns that we can expect in the coming maybe a decade would be an appropriate timeline.
Sure, yeah. So I guess we're going to be discussing inflation, yield curves, and then interest rates, and they're higher now, right? So let's start with inflation. So I think it's fairly clear we're entering into a high inflation environment that's significantly different from the last decade, where we were used to very stimulative measures by central banks, a lot of quantitative easing. In Europe in particular, it was very difficult to get inflation above a certain level. In fact, you had negative interest rates here, which was quite a phenomenon from the monetary perspective. And now all that's changed. During COVID, we had the Federal Reserve and other central banks in the West printing anywhere between 50 to 80% of the entire money supply in existence, and that was likely, a small impetus to the inflationary catalyst. And then we had supply chain disruptions, and now this sort of deglobalization trend that's happening, that we're seeing acting more as a structural force on inflation. So it seems like it's not just going to be a cyclical inflationary cycle, but it will be something more structural, which will cause a big shift in long-term inflation expectations and long-term thinking. And so given that happening, we now have, record-breaking yield curve inversions. The 1 year, 2 year, 3 year, 5 year, and then the 10-year, and so you have a huge amount of a large increase in these rates in the front end of the yield curve, with the back end of the yield curve still yet to catch up. And people talk about inversions that they're very scary, but I think the real scare is what happens next with respect to, will that back end of the yield curve come up, and will the cap rates, for example, with respect to real estate, will that spread start to widen again and sort of reach something that we're used to historically? Because we haven't seen that really happen yet, at least from my perspective in Canada. In America, depending on the asset class, you're seeing it happen. So, office is obviously the talk of the town after COVID. There's definitely some price deflation in office, but we haven't really seen that too much in other sectors yet. And then higher interest rates. So a lot of people, talk about higher interest rates in the context of pain. And yes, it is painful when we're undergoing a shift. But I think in the sort of a higher level perspective and in the long term, I think it's quite natural, right? We have something that in finance we like to call the natural rate of interest. And, the economy is always trying to figure that out. Where is that natural rate of interest? And, given how much of monetary stimulus and quantitative easing we've had in the last decade, I personally think the natural rate of interest is somewhere closer to where we are today, right? And so the question is, will central banks overshoot? Will they undershoot? I guess we'll see. But ultimately, it's a good thing that money costs something, because when money is free, or when the price of money, or rather in the context of interest rates, the price of time isn't expensive or doesn't have a value, then it becomes difficult to make smart or good capital allocation decisions.
Yeah, then each and every investment looks great. Exactly. If you discount with nothing, then everything is great. Yeah.
Exactly. And when everything looks great, you end up in speculation, right? And you start to push investors out to the right side of the risk curve, where you all of a sudden you get a lot of these creative financing solutions that don't necessarily lead to any sort of fundamental change. And so in the context of real estate, again, in the context of any industry, I think it's good that interest rates are rising, because it'll force investors to make better fundamental decisions. And we'll see, the tide sort of come in, and, just not to be politically incorrect, but we'll sort of see who's swimming naked, right, and who's not. And perhaps there are decisions, or there are projects that, were started that didn't really have a fundamental basis, that might now, turn over into something else. So I think in the short term it's painful, but in the long term we'll see a good adjustment, and I think we'll see smarter capital allocation decisions, and I think the future looks bright for the right projects.
Yeah, maybe the pace of interest rates rising that hurts people, but from the other side, central banks have to show attitude in fighting the inflation, and from the other side, they have to balance the social component of the equation, and it's probably the hardest decision to make.
Exactly. Yes, it is. It's challenging.
And as you mentioned, quantitative easing created a lot of money, and that money increased the stock exchange, the real estate, and others. In Serbia, as we do not have developed capital markets, as Vladimir said, most of the liquidity went to the real estate. And this inflated the real estate prices, both in residential, in office, retail, and so on. And I would say that if we would have deeper capital markets, maybe redistribution can be made and we could onboard some smaller investors that currently do not have many options. Maybe, Vladimir, you can share your thoughts about real estate investment trusts, alternative investment funds, and other forms of collecting free cash flow to invest in real estate.
Thank you, Peter. And just to share my opinion regarding inflation, Maxim discussed, it is very specific to watch inflation as a phenomenon from Serbia, because when we talk about real estate and capital markets, we are usually watching inflation in euros, so it is something about 7 or 8 percentage points. But what we actually paid as persons who lived in Serbia, we are paying inflation of 15 or 14 or 15 percentage, while the exchange rate is stable, almost fixed. So it's pretty awkward situation. And when we consider the capital markets and products, we definitely doesn't have any inflation protected or inflation linked products in Serbia. Even globally, it's not so large market, even globally, but in Serbia especially, there is no any way to have any link to consumer price index or anything similar. When we talk about real estate and capital markets, real estate has one product which is not so promoted or officially. The most famous retirement product, investment product, is not any investment fund, is not rate or something similar. It is a small apartment in the city of Belgrade, and the second product is in the city of Niš or Novi Sad, and then we have maybe 5 free places, and then we have a investment fund from our pension and insurance companies. So that is situation in Serbia, and capital markets are very important just because of that. We have situation that the consumers or clients doesn't have maybe don't trust, or maybe doesn't have enough investment potential to personally invest in real estate. Also doesn't have maybe knowledge, but they certainly wish for it, because from my time when I worked as a personal investment advisor, real estate is the first of choice as an asset class. So nothing else, no cash, no gold, no stocks, nothing else, no bonds, even government bonds, real estates, and specifically apartments, so residential sector, let's say. So that is something, which is not good to fight with. You have client and they have their desires. So maybe we should, as a market participants, start to offer something which is to satisfy that demand. And at that point, I realized that real estate investment funds are something that is really, really important, and not only from the demand side, also from the supply side, also from the regulatory standpoint. We had 2 or maybe 3 years ago, we have those efforts from the Minister of Finance and some institutional investors. We have that project for supporting listing of some companies on Belgrade Stock Exchange, IPO Go. And it's not something spectacular that happened at that time. We have one company listed, so that is it. And I will not comment it as a success. It's checkpoint. Okay, we have one listed, the second never happened, so that is it. But on other side, we doesn't have any company in Belgrade Stock Exchange listed, which is devoted to the real estate sector as some investment vehicle. So we have in Belex index, we have Jedinstvo Sevojno, we have Energoprojekt from the construction sector, but it's not real estate. It's totally different stories. We doesn't have here any operator of the hotels, office space. So the huge potential exists on local capital markets to improve the whole situation, especially if we got to some kind of rate regulation which exists already in 14 or 15 countries in Europe, and especially in Bulgaria has really nice results with several companies listed on Sofia Stock Exchange. I think market cap is somewhere between 500 or 700 millions of euros. So it's very, very big, even for our stock exchange. So that is something which could be done with not so much effort from our regulators, because we already have nice regulation. We have regulation about investment funds in Serbia. Now we have alternative investment funds, so only need to use that. But the way of use is something you should not fight against demand. If the clients want investment in real estate, you should offer them a product. And that product should be something which is regulated, which is liquid, which is something very important from the physical person as investors. So that is very huge potential, and that should be used also from all persons that participate in real estate sector. Sorry, Peter, if I take too much time. Insurance companies, Radi is from that sector. They are very nice players and could be nice additive for this story about real estate investment funds development. So it was maybe 10 or 15 years ago, one huge company from real estate sector in Serbia, Cepter, participate in investment fund industry. But it was equity funds, nothing related to the real estate sector. Sorry if I'm mentioning specific companies, but I like to talk about specific things with concrete names, with specific rates and what is currently happening. At the moment, you have inflation of 15% in euros, in dinars. It is almost the same in euros because we have stable exchange rate at the moment, and no any financial products which could bring you more than nothing close to 10%. We have government bonds, which is from 6.3 rather. Well, from 2 to 8, if you believe me, but please believe me, that is it. You can buy it at 2 and also the same at 8 percentage points, at the yield of 8%, but the liquidity is not so great. So that is really, there is really no some products, and this is huge potential for real estate industry. At the moment, there is so many, my opinion is that there is so many projects on the offer side, but nobody offers something in small pieces to real estate, to investors who want to be real estate investors, but doesn't have capacity in terms of amount, in terms of time, in terms of knowledge. Yes, so it's really, really huge market, because in 2007, 6 or 7 investment funds focused on equities, on stocks, raised maybe more than 100 millions of euros in less than 6 or 12 months. So it was very fast. Now we have savings in Serbia more than 1.5 billion euros. Sorry, more than 10 billion euros. And my personal opinion is that at least 1 billion is probably would like to be in real estate at least 1 billion from that amount, but there is no product for that. So that is something which is very interesting. And what is also the problem? Problem is motivation and taxing. Fiscal policy in Serbia is not supportive. There is no rate-alike regulation which enable you as a physical person to avoid double taxation. At the moment, if you invest in some company, that company invests in real estate projects, you will be double taxed on that investments, and that is something which rate should enable to be avoided. And it's very nice to someone to mention that to our Ministry of Finance or whoever is looking at that problem, and specifically from the point of developing of capital markets, because IMEC was a 200 million company which was delisted from the stock exchange. It will be excellent opportunity to have another 100 or more million real estate company on Belgrade Stock Exchange. It will be huge success from the stock exchange, from the regulators, and also for market.
Thank you, Vladimir. You covered really a lot of topics, and we will elaborate on some of them in the coming minutes. Just wanted to maybe point out one difference that you mentioned between the construction and the real estate. From the banking point of view, construction is seen as more cyclical than the real estate, and the stability real estate is offering, especially in the downtime, is something that attracts insurance companies to invest in real estate. Right, Rade? Do we have that kind of experience on local market?
Yes, we have, but unfortunately limited. So in theory, I have one. So in theory, it is allowed to invest 20 up to 30% of technical reserves of the insurance companies into the real estate. We are highly regulated market all over as an industry all over the world, including Serbia as well. But this opportunity is not used as it should. So I was looking at 2021 data. This is the last officially available for the call market. Only 3% of total assets of insurance companies invested into the real estate. We are talking about the investment properties and not the properties that are used for the business.
Probably offices dominantly.
Predominantly offices, and if you look at from the perspective of technical reserves, this is around 5% of technical reserves. So there is a significant upside potential there. What is the limitation? Basically, the limitation comes from the investment policy of all insurers, and I think it's around assessing the ease of investment into the real estate and into the alternative. And now we are talking about there is a market for investment of insurers when you're talking about the bonds, especially. So currently you have a Serbian US dollars euro bond that is traded at 6.3% yield, and without any additional cost, just the brokerage, then you wait until the maturity usually, because you want a stability, especially on the life insurance side. But what is the expected yield on real estate in Serbia? So it's always around expected rent and movement of the rent compared to the current price. And there are a lot of hidden costs there in maintaining these investments. Yes, I think we were talking about the high interest rates. I think they are basically the main preventer of insurance companies in Serbia going more. You mentioned the macroeconomic unlogical situation with us, with the inflation in dinars 15%, with almost no movements on FX rate in euro. go to Turkey. You have you have official inflation there that is double digit, unofficial triple digit, and the FX rate movement was depreciation of Turkish lira of only 10%. But they're still very much active into the real estate, especially in Istanbul and few other cities. When it comes to the realization of this potential, I think it's always around supply and demand. On real estate residential part, I don't think the insurers will basically enter this segment of the market. On the office, maybe even in warehouses, I guess there is a room. The only problem I see is basically because if you are acting as a private investor and you want to invest into the offices or warehouses, you are going to develop this property and your investment is going to be significantly lower than to go to market to buy it. Insurers are forbidden to enter into those projects from a development phase, so their entry price, their investment is significantly higher, so that basically drives the yield down. And this is where I see the potential maybe to change, to move some investments into the vehicles that can be allowed from the national bank perspective. On the other hand, those are the risky investments that I don't think that allowing a high portion of your assets and technical reserves will fit, but for the start, maybe just a few percent just to try to drive this portion of the market.
Thank you. So we started in Canada, going back to Serbia, and maybe to share some Croatian experiences. What are the similarities, the differences between our legal frameworks?
Well, when it comes to the legal framework, I will speak only from the Croatian perspective because and EU1, but I think that mostly, as we discussed in preparation for this panel, I saw some similarities in terms of the legal framework. When it comes to the real estate financing, mostly the countries, Croatia and I think the countries in the region, are based on traditional banking lending. Most of the local banks are not willing to support the real estate finance project, so the financing comes from out of the region, from either UK-based banks or we have certain German-based loan agreements as well. So here we have traditionally we secured the real estate, we secured the repayment of loan by collaterals. We can provide the first rank and the second rank. The second rank mostly is reserved to the mezzanine lenders. And this is something which is standard procedure when it comes to real estate financing. The hotspots, which you already mentioned, are alternative investment funds. There is a huge regulation, which are highly regulated on the EU level. So Croatia is also implementing those trends, but although we have a good regulation, there are no real estate-based funds, alternative investment funds. There were only a few, none of them are listed. Mostly they are closed-end funds, which are basically reserved only for private individuals and investors. What we see in practice as a trend is securitization. There were, especially now, it's a high topic, although the securitization regulation in Europe is in place from 2019. And what most of the investors, at least in Croatia, are looking, which is also in line with global trends, is investing in ESG-backed asset. So this is something which I see as a potential opportunity, not only for on the local market, but also on global market. But on the other hand, there is a need for that, but also we will have to have at least a broader local knowledge in order to implement projects like that. For example, the last securitization transaction where we were mandated to provide the legal advice was actually based in Austria. The securitization happened in Austria, but the assets were located in Croatia. So this is something which I see as a, let's say, a great opportunity. But then we came to the local regulator, and when we tried to explain what is going on, they were not, they didn't understand. So I think that at least in Croatia, and I believe in all other countries in the region, there are a lot of opportunities, but the willing element is something which is lacking, at least to my experience.
Well, conferences like this should move things forward, and we see some positive developments as being part of REBEC for years. Each and every year we have one step more.
I really do hope that we will move from this traditional lending. You as economists will know better than me as a lawyer, but this is quite expensive. I think it's better to move to the capital markets, which is quicker, especially in terms of issuance of bonds and through securitization and raising funds through that, because I believe that this is something which we have to comply with the modern trends in general.
Yeah.
Yeah.
I agree, definitely. Even I'm coming from the banking industry.
Exactly.
But
Yeah.
to connect the dots now, I have learned recently that while Serbian National Corporation for Insurance of Mortgages was established, the Canadian one was advising on that. And so maybe Maxim can share his experiences with rental housing, with the whole ecosystem of Canadian state supporting the real estate development, which is, if I understood correctly, maybe the missing part in the region.
Yeah, absolutely. So just to go back to the securitization part, because that is a very important part of how that particular asset class, which is the rental financing and the rental apartment building asset class, works in Canada. So I definitely agree. I think that securitization is really important, and in order to give depth and liquidity to this capital market and to this region in general, because once we can establish a framework to do that properly here, it really opens up the market to other players as well. And then all of a sudden you have a much deeper market, you have lower financing rates, you have more competition. It's a win-win for all. So that being said, the way things work in Canada with respect to the rental industry, and we have securitization for various different asset classes. I mean, we have it for office, for retail as well. In the States, it's a bit more developed, but the rental one is very developed in Canada. And so there's the lender starts with the origination of the loan. The lender then packages the loan package, goes to something called the Canada Mortgage Housing Corporation, which is an insurance company that insures the bond. So that insures the lender against the fault of the borrower. So that corporation adjudicates the loan through their credit system. They issue a certificate of insurance. The bank then feels very comfortable in issuing the loans out, which it does. And then every quarter, all of those loans that are issued get pooled together, and then they get securitized. And then the purchaser of that mortgage-backed security is ultimately either the central bank or other market participants, such as insurance companies, pension funds, other banks. And so this ensures that there's a continuous flow of capital. There's always liquidity available for this product, because it's either going to come from the central bank as a lender of last resort, or it's going to come from other market participants. And so it's a very popular product. In Canada, the terms are extremely advantageous. So just to give you an example, They're coming out with a new sort of product right now, and they're lending up to 95% loan to cost at a 1.1 debt service coverage ratio. Obviously, you have to qualify, but nonetheless, very advantageous terms to build rental buildings.
At least money is not an entry barrier. Down payment, from the down payment point of view.
Yes, because the key difference between rental and condo developments, for example, is the fact that rental does require a larger upfront equity cost because you're not taking deposits from your pre-sales when you're selling the units, because you're holding the units. But that in and of itself is actually a benefit, and this is really something that I think Serbia and this entire region should be exploring. In terms of building out this asset class. So, there was a study done in Canada for the last 10 years, and they looked at condo developers versus rental developers and who ended up making more money on a risk-adjusted basis. Okay. And when you looked at across the last decade, it ended up being that the rental developers made more money because they ended up holding the land and they ended up holding the building, and so they accrued all of the gains as interest rates were coming down and as real estate prices were coming up.
So all the capital gain remained there.
Exactly. And at the end of these 10 years, they still own the asset and it's still cash flowing, right? Versus as a condo developer, you're more focused on flipping, on quick in and outs, right? And so it's a different type of investor that's attracted to the rental product, right? And so that being said, I think there's a lot of benefit to exploring that asset class, both from the investor perspective, but also from the tenant perspective. In Europe, a lot of people rent, and it is an asset class in Sweden and in Holland, in Germany, and Austria. But again, so from a tenant's perspective, why would you go into rental house? Why would you go into a professionally managed rental asset? Well, it's because you have one owner to deal with. They professionally manage the suites. All the maintenance is taken care of. You just need to call, one number, for example, instead of dealing with each individual condo owner. And you don't have to worry about getting kicked out because no one's going to sell the unit and no one's going to move into it as well. So, I really think that it's something that should be explored, and it's a holistic endeavor between, I think, government, between capital markets, between banks being open to lending into that asset class. It really does need that support because it is a large equity requirement. But again, I think that if we can establish something like a commercial mortgage insurance company in Serbia, which we do have, it's just not as developed, and it's frankly not well known, I think, not even within the region, because when I was asking people about it here, they weren't as aware of it either, right?
Well, people who took mortgage, they know about it, but others don't.
Yeah.
From the cost side.
From the cost side, yeah.
So it doesn't have to be, the terms don't have to be as advantageous, because obviously there's different risks associated with each individual area and geographical context, but again, they can structure it in a way, just as an example, where the insurance covers 75% of the loan, and therefore the bank still has to take on a big responsibility in assessing that risk. They can't just sort of close their eyes and start lending money, so the risk is really shared. The underwriting and the origination, adjudication, and the due diligence is still required, right? But having that insurance basis as this foundation for then the asset class to build on expands the market, because banks end up feeling more comfortable. So you end up having more capital coming in. Therefore, interest rates end up coming down. Therefore, there's more lending activity, there's more liquidity, and so it's quite an indirect way to stimulate the market, right? I can go on sort of forever about this too.
Yeah. What I catch is that if the real estate is a pie, this pie can grow definitely. And if we put more ingredients like insurance companies, like alternative investment funds, or real estate investment trust, the pie can be bigger and bigger, and there is piece for each participant depending on his taste.
Exactly, right? And just to sort of put it full circle with the beginning point of inflation and everything, So real estate's a hard asset. Hard assets tend to do well in inflationary environments. The caveat there being is real estate is also a highly leveraged asset. And so when interest rates do go up, it is quite sensitive to the movement in interest rates, but it depends on the proper utilization of that leverage. And again, that goes into, you know, the idea that it's just the turnover of ownership. The asset itself is still good, but perhaps the one owner took on too much leverage, and now, you know, you're going to have another owner that is going to take it over and they're going to manage it better. But in and of itself, as an investment class, you know, for the next decade, I think real estate presents an amazing opportunity, and you know, now is really the time to start exploring that. And just one last point on the topic of comparing sort of Serbia and Canada, because I think it's interesting. In, you know, Canada right now is quite leveraged. Their debt levels are quite high, and it is, for the most part, is seemingly sustainable. But just as an example, you know, federal debt to GDP is above 100%. It's around 110%. Household debt to GDP is around 102%, which is actually down from 2021 when it was at 110+% as well. In Serbia, for example, federal debt to GDP is 56%. I'm not sure what the statistic is for household debt, but I'm assuming it's quite low as well. Now, obviously, there's different credit ratings, there's different debt service capacities, but nonetheless, it would almost seem at this sort of high level that Serbian real estate is somewhat less risky than Canadian real estate. If we're just looking at these sort of financial factors, right, without considering, of course, you know, the demand side of the equation, immigration, policy, et cetera. But it's an interesting perspective nonetheless. So again, I think that Serbia is seems to be uniquely positioned to ride out the storm quite well. And I hope that, you know, we come out successful on the other side.
Yes, definitely. And maybe to link a few more things together, we have massive construction works in terms of railroads, highways, and to maybe make a parallel with the Turkey, but in a positive way, that I learned that most of the hotel owners in Turkey are actually construction companies that are involved in construction, and probably something similar will happen in Serbia as well, because it's connected ecosystem, and they are natural investors in that respect. So hoping that we will create an environment where all those possibilities can happen.
We're getting close to that from also from the credit rating perspective. I mean, Serbia is rated BB+, which is one below investment grade. So imagine, you know, how much the market opens up when we actually reach investment grade. It's just one more notch up, so to speak, and that really opens up the entire market to sources of capital from institutional sources that perhaps weren't allowed from either a regulatory or a fund mandate perspective to invest in something that wasn't investment grade. So to that point, you know, I think we're getting there. I think that, you know, again, the future looks bright, and the construction industry right now in Serbia that's actually seemingly booming, relatively speaking to what it was, you know, 10, 20 years ago. And on some level, even relatively speaking to what it is in Europe today. So there's a lot of bright spots within the market that I personally see coming from Canada. Canada's also bright. If anyone likes to invest in Canada, let me know. But by all means, right? Just while I'm here, I do think that there's a lot of sort of sun on the horizon.
Yeah, thank you for this positive tone in that respect. Maybe this is the opportunity to ask for audience if there are any questions. Yeah, please. Just the mic, please.
I have one actually just for Martina. Is the legislation, is the legislation that exists within Serbia, does that prohibit domestic private individuals from buying stocks or other financial securities abroad?
I can only speak from the Croatian market. There is no such prohibition to Croatian borders. But if you want to onboard such service into the Croatian market, you have to report, and several considerations will have to be checked before doing so. In Croatia, marketing the investment into the securities is a bit of, from the third countries, it's a bit of a gray zone, because it's not, we have a regulation that any kind of advertising is a regulated business, but the Croatian regulator does not have any kind of competence to put certain measures. They can only give warnings what they actually are basically doing so far. So they cannot initiate any kind of procedure against such marketing activities, but they can only inform the public through notification that certain activities have been done which are not in line with the Croatian regulation.
And Vladimir, is that the same for you, or it differs?
It is permitted. It is permitted. It is permitted.
And for, let's say, domestic pension funds as well?
Yes, as well for domestic pension funds, but with very strict limits.
Right, but that would then, by virtue of that, and obviously depends on what tax treaties there are between Serbia and outside within the European Union, but there are many real estate funds which they could directly participate in, and therefore they could then get exposure, or those investors could get exposure to the real estate market on a European basis.
Of course, yes, they could.
And why does that not happen then?
Well, I'm not sure, I'm not informed, but as I know, there is so many persons in Serbia which invest through local brokerage or also directly with broad brokerage, with online platforms. They're investing usually in stocks. Person which I know usually investing in stocks. When we come at real estate, it's more direct investments here in Serbia. Maybe in Croatia, Montenegro, but it's in region. Also, there is something, but it's really for much bigger investors. There is Austria, there is UK, and also United States. That is something which I already know from the local markets. But in publicly listed real estate, I don't know anybody who is seeking real estate in that way.
Okay.
Gentleman at the back.
Just a very quick, simple question. Maxim was talking about the investment rating for Serbia. He said it was BB plus. In Croatia, what is it now? Do you know? Is it BBB plus?
I think it's BBBB plus. Yeah, I think so. I would have to check that.
No doubt because they've adopted the euro and all that kind of thing. I just wanted to feel, when would Serbia be able to get up to that kind of decent investment grade? Yeah, I suppose nobody really knows.
Maybe to the banker, the Serbian banker.
Well, we are first in the line at the lobby, so hoping it will happen soon.
But maybe Croatia just got that because is that a recent thing with Croatia? I think it might have been. I'm not sure.
It might be. It might be. We entered into Euro zone, which for sure makes things easier, especially transactions. There are no exchange rate risks anymore. EU companies are allowed to, not only companies, but also the individuals, to invest into the real properties in Croatia, because we are now, there are no such kind of restrictions which existed before that. And I think that could be the reason, yeah. Entering into Euro for sure.
Yeah, and there is one benefit for the region as well, as there is some surplus of euro liquidity in Croatia now, and I can speak in the name of Erste Group that this part of this excess liquidity will be landed in the region, in the countries that are lacking euro liquidity, like Serbia is. So we are also happy you got
Excellent.
the euro, because
at least some advantage of that.
yes, definitely. So if no more questions, I would like to thank you for being with us, to thank to the panelists for interesting story, and hoping that some of those thoughts will materialize in some specific projects and movements on the market. Thank you very much.